So let's say you bought a home 10 years ago and you're starting to think about a move. Maybe you're outgrowing the home, or maybe you need to downsize, or you've got a job relocation, whatever the case may be. But you're looking at the market and you're realizing, I paid $300,000 for this home that today's worth $600,000. So I have a fair amount of equity. Maybe you refinanced at the bottom of the market when rates were around 3%, bottom of the mortgage interest rate market, and your payment's $1,500 a year for this house that's worth $600,000. Maybe you owe somewhere in the low $200,000 range, $215,000, $220,000 for a loan balance, and you're starting to think, the wheels are turning. Should I really sell this thing, or should I hang on to this extremely low interest rate mortgage that I have? And that's an issue or challenge that we're observing much more often in today's market, especially as the real estate market has changed a little bit and it's not as easy to sell homes and mortgage interest rates have gone up. And so you may want to feel like you're hanging on to some of what was a phenomenal interest rate for your current home. So let's take a look at pros and cons of selling it versus the pros and cons of keeping it as a rental property. So the pros of selling it, the first of which that comes to mind is the tax treatment that you get when it's your primary residence. So if you are single or file a tax return as a single individual, you can exclude up to $250,000 of a capital gain on your primary residence from any sort of long-term capital gain tax. If you're married filing jointly, that number bumps up to $500,000 of a gain. And beyond that, I won't get into the nitty-gritty details. That's kind of like a call me offline or ask your CPA type thing. But that is a great benefit. And the catch is that goes away if you haven't lived in the property 3 of the previous 5 years. Basically, the catch is you have to have lived in it 2 of the previous 5 years for it to be treated as your primary residence from the perspective of the IRS. So that's number 1, is the tax treatment that you get. The second part is this was indeed your primary residence. You may be emotionally tied to it. And I've just time and again seen where someone turns their primary into a rental property. They realize that a tenant is not going to take care of the home the way that they did, is not going to love on it and care for it the same way that they did, and that really rubs them the wrong way. And that's just sort of a recipe for disaster. And being a landlord is expecting your tenant to take care of it the same way you do. So if you sell it, you kind of break that emotional tie and you don't ever have to think about or worry about the property again. And then the last thing on the pros of keeping it as a rental property is just the financial flexibility that you get. You get to put those eggs in different baskets. If you've got a large gain coming, like I said, could be hundreds of thousands of dollars. Maybe you need to put that into your new residence, but in my scenario here, you probably don't. If you're considering keeping it as a rental property, you could go invest that in public markets. You could split that up into different rental properties to sort of offset the risk and improve cash flow. So that's the thing about selling it, is it gives you the ability and opportunity to diversify how that money is earning a return. Okay, now for the cons of selling the property, first of which is, again, financial, the missed upside of real estate appreciation. We know after hundreds of years of watching real estate markets that real estate will appreciate. The dirt underneath your feet that the home is built on will appreciate because there's a demand for places to live, especially in a growing market like Jacksonville, Florida. So if you sell it, you miss out on future appreciation. And beyond that, if you had a great mortgage interest rate in place, you will no longer have that low interest rate loan to brag about at cocktail parties. The second con of selling the property is that there are costs associated with selling real estate. Basically, that's the state's opportunity to come in and get some tax revenue. Also, real estate brokers charge for services whenever you're selling a home. So that's something to think about, is just because your gross selling price is X, take into consideration what your Y, like net selling price or walkaway money, is going to be to make sure that the number that you're going to walk away with is still compelling, because there are costs associated with selling it, even if you don't have to pay the IRS any capital gains tax. The other sort of financial con, so to speak, or potentially negative aspect would be if you're not the greatest with managing your own money and you know that you're going to go blow it and buy a new boat, new car, new vacation, all in one fell swoop, as opposed to using that money wisely, then maybe it's sort of a forced savings and investment program for you to keep it tied up in that former primary residence and turn it into a rental property. That way, there's no opportunity to do anything else with it. Okay, now let's look to the keeping it as a rental option. We'll start with the pros of hanging on to it, and the first of which is financial. And this is why I love rental property, is it generates and creates perpetual income. So every month that you have a tenant in place, they're paying rent, you have an income stream. And if you can put some of those together and have multiple income streams, that it's passive, it does require your attention and requires you to be strategic about how the property is being managed and that's what improvements you're making, et cetera, but very, very few hours a month, maybe even a few hours a quarter, can be all you need to make sure that this investment performs and moves forward into the future. There are also tax benefits. We talked about, the tax benefits of selling being that you don't have a long-term capital gain to pay if it was your primary residence, but if you turn it into a rental, you can then depreciate the property, which means you're taking a paper loss every year to deduct against the income that you've made, and so that can be a good thing. It's also an ask your CPA if you want to get into the nitty-gritty details of tax benefits of owning rental property, but that's one thing that you certainly should consider. And as I mentioned before, with having refinanced when mortgage interest rates were really low, if you do indeed have a low interest rate mortgage, you get to hang on to that for the long term and really enjoy the 3% interest rate for the next 10, 15, 20 years while you own this property as a rental still. The other thing that we see often in the Northeast Florida area with all of our military moves is that we'll have members of the military who bought a primary residence, they get orders to go elsewhere, and they turn it into a rental with the future expectation that they may be back in the Jacksonville area and want to move back into it, at which point you let your tenant's lease run out and then you move right back in and take over as your primary residence. Obviously, if you would have sold it, you would not have been able to do that. Now for the negative aspects of turning your primary into a rental property. I mentioned it before, but tenants never treat your stuff the same way that you do. So if you think that's going to be a problem for you personally, keep that in mind. And then again, with the tax consequences, so once you get beyond that third year of it not having been your primary residence anymore, if you do decide to sell it at that point, you will be subject to long-term capital gains tax rates. I'm not a CPA, but we'll plug some IRS links so that you can take a look at it in the article on our website. And that's just one thing that you need to consider. And the rental income is taxable as well. So you just want to make sure that you're making decisions based on the net effect of what you'll be receiving, not like the optimistic gross top line revenue number. And then the last thing in terms of negatives go and turning it into a rental property would be that if you haven't owned rental property before, again, sometimes you can be a bit optimistic about how things will go. Costs go up. So your real estate taxes are going to go up because you're going to lose your homestead exemption. Your insurance costs are going to go up because insurance companies would prefer to insure properties that are primary residences versus rentals because their algorithms say we're going to have more claims and more expense on rental properties than we do on primary residences. So your insurance costs go up a bit, your real estate taxes go up a bit, and then obviously your maintenance for wear and tear stuff is going to go up. I saw an article on Forbes, I believe it was, that estimated 5 to 8% of gross rent in maintenance costs, depending on the age of the property and type of the property. Probably not much less than that, but certainly could be a little bit more if it's an older home that's just in constant need of attention. So if you're really wanting to dive into this, I have calculators on thinking about like return on equity and a bit more fancy math to give you an idea for what the numbers would look like when you think about selling it versus renting it. But at the end of the day, my suggestion would be give me a call, because no matter the calculator, it's not going to be able to measure like the emotional hassle of potentially turning a primary residence into a rental And that just depends on your personality type and like how long you were in the home, what kind of memories you have in the home. And that's something that you just need to sort through and have somebody pepper you with questions on so that you can bring to the surface. Is this going to work, or is this going to be a headache for me? So hope that's helpful. Feel free to reach out if you do want to have that conversation. 904-405-1995. Jeff at pursuitrealestate.com. We'll catch up soon.